Please go ahead, sir.
Dr. Niranjan Hirandani ji, SHM, Founder and Managing Director, Hirandani Group of Companies. Mr. Ravi Ahuja, Co-Chairman, National Council on Real Estate, Housing, SHM, and Head Commercial Business and Realty. Mr. M. Nagaraj, Chairman and Managing Director, HUDCO, Shri Gagan Bangaji, Vice Chairman and Managing Director, India Bull Housing Finance, Mr. Irfan Ekaji, Chief Investment Officer, Swami Investment Fund. Everybody knows him very well. Mr. Neha Barlia, Co-Chairperson, NEDCO, SHM, and the Member Management Board, APJ and 7 Group. Mr. Tripathi, MD Aadhar Housing Finance, Mr. KK Gupta, Director Resurgent, and all जितने भी लोगों ने आज इस SHM ने इतने अच्छे वेबिनार का एक ऑर्गेनाइजेशन किया है जिसके अंदर आज हजारों लोग इस के तरीके से चीजों को नॉलेज को हम शेयर कर पाएंगे और ये बहुत अच्छा एक इवेंट उन्होंने जनरेट किया है। आप सब लोगों को मेरा नमस्कार। जहां तक इस दौरान में लॉकडाउन के दौरान इस दौरान एक सिस्टम पूरा सारा चेंज हुआ, काम करने का तरीका चेंज हुआ, पूरी इंडिया बदला, काम करने का तरीका बदला, बट जो कस्टमर की नीड है वो शायद बदली नहीं है। अभी भी उसका सपने का जो घर लेने का मन है वो आज भी है। और खासकर से जो मेरा पर्सनली एक्सपीरियंस रहा है और जितना आज तक समझा है उसके हिसाब से जब कोरोना के टाइम में जो लोग किराए पे रह रहे थे उनके साथ जो स्टोरीज हुई हैं उन्हें रियल मतलब पता लगा है कि वो अपने घर में होते तो उसका क्या मायना होता। तो ओवरऑल डिमांड का जो मामला है वो बढ़ा है, घटा नहीं है। और एक इसका रिस्क और इसका एक बहुत बड़ा रोल हाउसिंग फाइनेंस कंपनीज है जिनमें आज कॉस्ट फाइनेंस सब 7% लेवल तक पहुंच गया, इवन सब 3% की सब्सिडी भी है। तो इफेक्टिव रेट 4%, 5% इस लेवल तक पहुंच गई है और आरबीआई ने और गवर्नमेंट ने इस चीज के लिए बहुत ज्यादा सपोर्ट किया है। और दूसरी बात, क्योंकि घर होने की जो जरूरत है वो बढ़ी है, घटी नहीं है, तो रियल एस्टेट पर से ये शॉर्ट टर्म का, ये मेरे पर्सनल विचार हो सकते हैं, ये शॉर्ट टर्म का इम्पैक्ट हो सकता है, बट लॉन्ग रन में इसके बहुत ज्यादा फायदे आने वाले हैं। कि लोग जो आज से पहले ये रियल एस्टेट को एक सिर्फ इन्वेस्टमेंट मानते थे, मींस घर को एक सिर्फ इन्वेस्टमेंट मानते थे, उसका दूसरा नजरिया भी बदला है कि जब वर्क फ्रॉम होम का कल्चर हुआ, जब आज वो किराए पे रह रहे थे तो लॉकडाउन के दौरान उनके साथ जो बिहेव हुई तो उन्होंने एक रियलाइज किया कि अपना घर तो अपना ही। आरबीआई की डाटा के मुताबिक मॉर्गेज लोन में फर्स्ट हाफ जो हमारा 2020 का गया है उसमें भी होम लोन की परसेंटेज में टोटल बिजनेस में बहुत ज्यादा सिर्फ 1% की कॉन्ट्रैक्शन आया है। पहले वो 12.9% हुआ करता था वो पोर्टफोलियो में, आज वो 11.9% है, यानी कि बहुत ज्यादा चेंज उसमें नहीं आया और उसमें लॉकडाउन का बीच का पीरियड गया है। और जो 6 महीने की इन लोगों ने जो अपना पीरियड बढ़ाया है गवर्नमेंट ने, उसका भी, क्योंकि ईएमआई उनको सर्व नहीं करनी पड़ रही है, तो उसका भी फायदा गहरे कस्टमर को बहुत ज्यादा मिला है। और सबसे बड़ी बात क्या हुआ है, पिछले 5 से 7 साल में प्रॉपर्टी के दाम बहुत ज्यादा नहीं बढ़े, घर की कॉस्ट वही है, टाइम गुजर गया है, लेकिन होम लोन का रेट बहुत नीचे आ गया। तो मुझे ये लगता है कि हाउसिंग फाइनेंस कंपनीज के लिए जो ये आने वाला वक्त है बहुत बड़ा गोल्डन पीरियड होगा। शॉर्ट टर्म को अगर हम ना सोचें, अगर नेक्स्ट 5 ईयर का विजन भी लें तो इट विल बी ए ग्रेट टाइम देन वी कैन यूज। और दूसरी बात, बहुत छोटा सा रियल टाइम एग्जांपल आपके साथ शेयर करना चाहूंगा। अभी हमने एज सिग्नेचर ग्लोबल अभी एक प्रोजेक्ट लॉन्च किया, जस्ट अभी 9 जुलाई को, और आप बिलीव करेंगे 10 डेज के अंदर वो पूरा प्रोजेक्ट सोल्ड आउट था। इवन वो 2 टाइम ओवर सब्सक्राइब हुआ है, 2 टाइम्स ओवर सब्सक्राइब हुआ है। मींस नीड इज देयर, डिमांड इज देयर, ओनली राइट प्राइस पॉइंट, राइट लोकेशन, दैट इज द की। और होम लोन पर से भी आज कस्टमर को बेनिफिट मिल गया, उसका रेट कम हो गया, ओवरऑल उसके अंदर सब कुछ पॉजिटिव है। मेरी समझ से हम एज रियल एस्टेट इंडस्ट्री, होम लोन का रेट कम होना और कस्टमर के अंदर और डिमांड का बढ़ जाना हमारे लिए बहुत एक अच्छा फ्यूचर भविष्य दिखाता है। हम शॉर्ट टर्म पे ध्यान ना दें, मेरा ये विचार है, और लॉन्ग रन में समझें तो आई थिंक सो द फ्यूचर इज वेरी ब्राइट। थैंक यू, थैंक्स एवरीवन। प्लीज।
Very good afternoon to all my friends. I'm so privileged to have over here Mr. Nagraj, CMD of HUDCO, Mr. Kazi, Chief Investment Officer of Swami, Mr. Tripathi of Aadhar, Mr. Gagan Banga of Indian Bulls, Mr. Ravi Agarwal, thank you very much for the introduction, Mr. Barelia, my co-chairperson, Mr. Ravi Ahuja, and Mr. Pradeep Shankar of Resurgent India. Thank you very much, all of you, for being over here today. I think we have to understand, and being in the part of real estate as an industry, and what we heard from Mr. Ravi Agarwal, hopes have really been rekindled, in the sense that if that is the kind of demand that can be initiated in such COVID times, then I think the green shoots are certainly going to be extremely important to do. The second part of the story is, as far as home loans and housing loans are concerned, India is probably having the lowest NPA in the entire world in terms of NPA for the home loan segment. And hence, this is the reason why banks and financial institutions are willing to take up a larger and larger portfolio of home loans, and they are able to price product at a lower rate of interest than the other housing finance agencies. And I think this is an opportunity really for expanding this segment. The third part of it, which is becoming extremely important, is to understand the needs of individual consumer. The individual consumer is of various types. Not all of them may be simple salaried workers. Many of them have different requirements to be able to move from a smaller apartment to a larger apartment. They may require to be having to sell an apartment and then buy 2 apartments or 3 apartments for various children that they need to do in terms of the benefit that you take for capital gains, and then go ahead and invest into the situation. Now, that is another opportunity. The second opportunity that we are seeing, which is there in the housing finance business, wherein these type of opportunities can be taken care of, which is actually have the opportunity to sell or take time in selling the original product while they are booking the newer product and getting time for the purposes of installment and payments to it. So a kind of a bridge finance is also required to be done in order to meet the requirements of individual consumers. The third important segment are those people who are in the informal business that are required to be done. These people in the informal business may not be able to show their credibility to the extent of the other parts of it, of the repayment capabilities of the persons, but they actually have an innate capability of doing it specially. The fourth is, of course, the business of business person who takes it as an investment opportunity to take up new products for the purposes of either rental incomes in terms of commercial or residential, or in terms of capital gains opportunity, which has taken place over a couple of years. So I think individual schemes or types of programs that can be done in the housing finance will be a great opportunity to growth. The issue of housing for all, as has been taken by the Prime Minister, is a great program, because it means 1.2 crore houses in the affordable housing segment will be delivered in the next 2, maybe 4 years, in view of the delays which are taking place. That's the segment which, according to me, has a huge opportunity. we are entitled to lend up to 90% in that segment of loan. And I think the opportunity in this segment is high, though certain housing finance agencies expect that there would be a larger risk factor in this segment than otherwise. But over a period of time, it has been proved that this segment is as secure as any other segment in terms of housing finance. And people in India are quite diligent in payment of the housing finance loans that is taking place. The next important point is to understand what the future of housing finance and mortgage business is. India, of course, has probably the lowest home loan mortgage as compared to GDP. It wavers around 8 to 9% of GDP is the home loan segment loan which is there of the sector. So the future is in fact going to be better than the past. The last part I want to adhere to is the segment of loans which have been given to developers and the need for last mile funding that has become extremely important. And that is why we have Mr. Irfan Qazi here today, who will discuss with us the scheme, the alternative AIM, which has been done by this, managed by the State Bank of India, and very effective in terms of doing it. However, when it came into being last year, it was expected that a limited number of companies would be having the problem, and hence 25,000 crores was considered quite fine. It is my belief that with all the situation being what it is, the amount of needs in this industry will rise over 1,50,000 crores. I have mentioned this to the Governor, Reserve Bank of India, and hence it would be possible for many more banks, financial institutions, housing finance companies to come up with funds of that kind. And the same type of scheme which is done by the Swami Fund could be catered for, because larger and larger number of projects are actually stuck and doing it. Some of them have already turned NPAs, but there are many projects which are not NPA today, but still would require this additional funding in view of the problems which have happened in the past and the COVID situation of today. A combination of this is actually an opportunity for housing finance agencies to really take it into consideration. There are challenges in the real estate market because of the lack of immediate demand which is there. But as we have seen in the case of 2008, when the Lehman crisis took place, the market came back in a matter of 6 months after the entire downfall during September, October 2008 and early 2009. But it got restored by mid and end of 2009. The stock market even started picking up again. So the curve of even the Lehman crisis was in India for housing finance agencies a V curve. So there was quite a benefit of restoration of demand that took place. All of you are experts in the individual fields and have had great experiences in the line of activity of housing finance, and hence, and now also in the case of financing for the purposes of the Swami Fund that we have here today. I think it is going to be extremely important for us to understand what are the nuances of this, what are the pros and cons of it, and how Mr. Irfan Qazi looks at the issues in terms of how the future on this side. So we have two angles today to really consider, or maybe more, that you will bring to the table. One, from the home loan segment, the opportunities which are growing leaps and bounds. And the second, which is the funds required by developers, either for the newer projects, the balance amount of fund for the older project, and also the money required for stuck projects which are there. People who are living in Delhi know that the entire thing of the situation started with the National Capital Region of Noida, where the numbers are very high and they do need a lot of structured finance to be done. The Supreme Court has also appointed me as director on Unitech, where more than 15,000 apartments have been sold but not completed. So we are all going to be challenged by helping the industry in order to restore the positions and public confidence, and also to be able to complete the projects which people have been able to do. So on behalf of ASSOCHAM, thank you very much for coming over here today. We are really happy, and the discussion and dialogue will certainly add to our knowledge and gyan of how we can further the housing segment of India, and also the fact that the Prime Minister's commitment of making housing for all, and also affordable housing, and now affordable rental housing, which has now been announced with him. So the focus of the Prime Minister, the government, is definitely in the housing shelter segment, and it's necessary for us to see how we can act as catalysts and take advantage of the situation. Thank you again very much for being over here. I feel happy to see all of you, and I'm very glad that all the icons have come here to add knowledge to our situation. Thank you very much. Looking forward to Dr. Neha Barlia to please come in and address us.
Dr. Niranjan Hiranandani, President ASSOCHAM, Mr. Ravi Agarwal, Chairman, Council Real Estate and Housing ASSOCHAM, Mr. Ravi Ahuja, Co-Chair, Mr. M. Nagaraj, Chairman and Managing Director, Housing and Urban Development Corporation, Mr. D. S. Tripathi, MD, Aadhar Housing Finance, Mr. Pradeep Shankar, Executive Director, Resurgent, India, Mr. Gagan Banga, Vice Chairman and Managing Director, India Bulls Housing Finance, Mr. Irfan Qazi, Chief Investment Officer, Swamit Investment Fund, SBI Cap Ventures Limited, Mr. S. K. Hota, Managing Director, National Housing Bank. Good evening to all of you. As we all know, housing is a basic necessity in every economy and is a measure of growth and social well-being. Development of housing is not just important to economic growth, but also generates demand for supporting industries and further leads to creating job opportunities. For any emerging economy, development of the housing sector has its own challenges, and the biggest of these challenges is access to finance. Our economy has already been facing challenges, and now with COVID, this has exacerbated the situation. In India, one of the sectors most affected by the outbreak and consequent lockdown is the real estate and housing finance sector. In the current scenario, we are facing a major issue due to migration of labor, so that large number of housing projects are on a standstill. I'm currently in New York and have been here for the last 5 months. And post-COVID, the real estate market overall has seen a level of depression which one could have never imagined. There's a combination of job insecurity as well as uncertainty in the markets. Sellers expecting unreasonable prices and a dip in affordability of buyers, since many lost jobs. With a stable economy such as the US going through this, one can only imagine what could happen also in India. Even though in India, the Reserve Bank has announced several rate cuts, but any positive effect in the buyer sentiments could only be seen in the medium to long run. However, this step has given a major support for existing buyers who might have been struggling to pay EMIs in the short and medium term because of the lockdown and the event of job loss. I feel in the times to come, when the economy starts reviving gradually, demand for housing by organized sector employees will take stride, but low-income affordable housing demand might take a little more time and will substantially depend on government support. Overall, what I believe is housing growth in 2021 will be like similar to the year 2020, and much will depend on the coordinated steps by the government and the Reserve Bank. Recently, the Reserve Bank of India has released a draft framework for the regulation of housing finance companies, or HFCs. The draft framework has proposed to bring the HFCs under regulatory umbrella of the RBI, thus bring it to a level playing field with other non-banking finance companies. The draft frameworks have recommended tightening the norms and bringing clarity in the applicable regulatory framework in the housing and finance sector. It has clarified that the areas where existing HFC regulation differs from that of the NBFCs, either existing provisions would be maintained or amendments would be introduced to the extent possible without disturbing the ecosystem. It has also proposed to define housing finance and address concerns over the conflict of interest arising out of lending and investments in group entities. Further, it has aimed to reduce regulatory arbitrage of the HFCs. Even though the government has provided a comprehensive regulatory framework to address the same, there is much to do considering the current situation, and a strong push really needs to be there to make us recover well. I would like to thank the esteemed panelists here for accepting the invitation for joining this webinar. I would also like to at last thank ASSOCHAM for organizing this wonderful webinar, and I'm very, very confident that the discussions today will be informative, fruitful, and would result in positive outcomes. Thank you.
I think I should take up now. My turn is there.
Thank you, Dr. Neha Berlia. As a coordinator and the moderator for this event, we have an esteemed panel ahead of us. Thank you, Dr. Niranjan Hirandandani, and it was very heartening to learn about
There's some interruption.
They lost the audio.
Hello.
I did something.
Mr. D.S. Tripathi ji of
Yeah,
Aadhaar
yeah,
House,
yeah.
could you
Yes,
please
sir. Yes,
speak?
sir. Yes.
Thank
Yeah,
you,
yeah.
sir.
Thank you, Doctor. Thank you. Very good afternoon to distinguished speakers, and thank you very much for ASSOCHAM for giving me this opportunity to be here. I think the context is well set by the Dr. Hirandani Sahab, Ravi Agrawal, and Dr. Neha. The one thing is definite, as all of you have said, that in India there is going to be a secular housing demand not only for 1 or 2 years, for next 10-20 years, because as Dr. mentioned that today we have only 10.2% of penetration of the housing, while China has 18%. And it is expected, leave aside the pandemic, we were expecting to reach 12% by 2022. From 6% in 2011, we have reached now 10.2%. Therefore, there is a huge scope. Centrum studies, ICICI CRISIL studies, they show that present 23 lakhs crore rupees housing loan outstanding of bank and HFC is likely to touch 35 lakhs crore, adjusting the pandemic effect. Now, coming to the next point, I think Dr. Neha touched very rightly about the low-income affordable housing. The total demand, which we are all talking about as a government or anybody, 95% comes out of the low-income and EWS, 40% EWS, roughly about 53% LIG, and 5% MIG and above. 5% MIG and above has been served by all these years by everybody. But where huge requirement lies, not in terms of amount, but in terms of the number of units for providing the house, there, the only from last about 8-9 years, the Affordable Housing Finance Company has come up. We precisely define 1 lakh to 15 lakh rupees loan size, 15 to 35 lakh loan size, 35 and above. 1 to 15 lakh loan size, I think 20-25% is shared by the banking system and some HFCs. The entire domain is left for the low-income affordable housing finance company, because this segment is mostly informal segment, which Dr. Saab has mentioned, where assessment becomes a key challenge and a lot of operational issues are involved. 15 to 35 lakh rupees, I think affordable housing finance company, all housing finance company, bank also overlap. They also share the portion. And above 35 lakh rupees, it is domain of the good HFCs, big HFCs, as well as the banking system, it is there. So therefore, similarly, the developer who provides the housing for X category, they don't provide the housing for Y category. If I talk of the low income housing, 90% supply of low income housing is from the informal builders. And not only that, roughly about 60-65% requirement is for self-construction of houses, where the developer supply is not involved. Unfortunately, the RERA and other things, they are common for everyone. The informal builders, they are not able to follow those guidelines because these houses are made at the outskirts of the city, periphery of the big cities, or within the smaller cities, or in the small towns. I think here is important role from the state governments comes. See that when layout is prepared by these informal segment for the plot selling or other things, it should have a simplified process or even simplified process of construction of a project which may involve 8, 10, 20 units, not more than that units. Now from 15 lakhs and above, the lot of even big developers are also coming because demand lies there. I think that is a good sign that will come. But if demand of the housing is going so humongous, there has to be funding opportunity should also be available there. For the smaller housing finance company, they are not having wherewithal to get the loan from the banking system or from any other. RBI has come out with a lot of measures in TLRTO also. RBI reserve 15% for smaller housing finance companies. NHB has come out with a lot of facilities. Government of India, 45,000 crore rupees partial paid guarantee. Large portion is meant for the smaller housing finance company only. So all these measures in these time have been taken. But a long run solution has to be found out by the Reserve Bank of India or by the NHB. I think NHB will be the right fit for providing the finance or providing guaranteed raise money from capital market, which RBI is flagged in the financial stability report that the capital market is having a less affinity for the HFCs, and whatever funds they do for the AAA and AA companies. So first and foremost, the funding opportunity has to come, and a small developer has to be encouraged to provide housing for the smaller segment. The government side, I think enough measures have been taken. There is one suggestion to the Ministry of Housing, which has done a lot of great job. Madam Neha mentioned that the informal segment demand may take some more time. It is true because they have to re-establish their business, which has been impacted by a pandemic. A simple way out, which I have always been talking, they provide 2.67 lakh rupees subsidy to the EWS and LIG. If the 50 and the margin requirement for the house in this segment, the HFCs has kept high because of the low sellability of the property. If the subsidy can be given as a margin contribution to eligible beneficiaries, at least for interim for 7, 8, 10 months, that may be a great help in pushing demand very quickly in the lower income segment. For LIG, MIG, no need to worry because subsidy can be given as per the present process. HUPA has already covered 20,700 places in the country for the purpose of giving subsidy. That is a great job done. Now that after migrant labor has moved to the villages, a lot of activities of housing is starting in small villages and towns. But unfortunately, the PMY rural has got only 2 lakh rupees loan limit and subsidy very small portion. It can be thought of making 5 lakhs. But from HUPA only, they have a wonderful scheme of credit for great guaranteed fund trust for low income housing. Unfortunately, that trust has got a typical condition. If anybody has taken loan in PMOI, is not eligible. In fact, the PMOI subsidy is for affordability of the borrower. Guaranteed trust fund is for the providing the risk-taking capital to the lenders. Both have a different connotation. I do not know why the confusion is there that those who have taken the PMI subsidy, they are not eligible. Amount is 8 lakh rupees covered. They can continue for 8 lakh rupees, but if they can extend to for all eligible loans for giving guarantee, there will be a huge lending push by HFCs to this segment. That is what. Dr. Neha, you covered one point very important, that RBI draft guidelines. I think RBI has a wonderful job in keeping the draft guidelines, which largely covers each and every aspect. They defined housing loan assets, which covers everything and anything pertains to the housing. It's a wonderful decision. But one thing which is very disconnecting, the RBI has said that 50% of housing loan asset for HFC has to be 50% has to be minimum. For that, they have also given glide path. If HFC will have only 50% housing loan asset, it means there's a huge risk involved for the HFCs to move from the housing to start lending to the corporates and others. And then the problem of systematic problem will come. Second, another problem is that of 50%, they want individual home loan value to be 75%. Unfortunately, it is come only 37.5%. 50%, 75%, 37.5%. If the individual home loan HFC will do 37.5%, then why it is HFC? It should be any other lender. So I think the RBI should consider, that is personal request I wanted to submit to RBI. Minimum 75% should be the housing loan asset, because that includes the builder loan also. That includes the loan to the slum development. It includes everything. And 25% they can do LAP and other things. And of 75%, at least 60%, or if not 60%, 51% should be the minimum individual housing loan asset. That is what another recommendation I wanted to make to Reserve Bank of India. On the National Housing Bank side, they have always been giving very good support. But I think whatever the government of India and RBI has HEB guidelines and other guidelines, they are sovereign. They can raise funds from the market more, and they can provide to housing finance companies at much liberal things. We should not expect the bank should always be coming and lending, because banks have also their limitation. Their risk aversion is well justified because of various reasons they faced in the past. There has to be the multiple lenders in the market to provide liquidity to the developers. Because if the RBI guidelines and other research reports say that 50-60 lakh rupees housing loan requirement will be there in next 3 years, it means a similar amount builders have to invest. So both the developer has to be there to get the loan, and similarly the lenders has also to get the liquidity system available with proper risk and other things. That is what my one submission is there to all the stakeholders. I will end my talk because my time is allotted is just over.
Thank you, Mr. D.S. Tripathi, for the insights. Would I now request Mr. Pradeep Shankar, Executive Director, Resurgent India, to please address the audience. Thank you.
Good afternoon, Dr. Hiranandani, Dr. Agarwal, Tripathi ji, Neha ji, and all the other dignitaries who are present here today. A very warm welcome to all of you. I am representing Resurgent India Limited. We are a Category 1 merchant banker, and we do the entire range of banking activities, whether it is for fundraising or for equity participation, as well as for helping the MSME sector in a big way. Anyway, today's topic relates to the housing finance. And as you know very well, the Prime Minister's announcement under the Awas Yojana, we have a huge target of 2.95 crore housing, which has to be by the end of 2022. Now, because of the current situation, we find that some of the states we are supposed to do the subsidy, who were to take up their share of the finances. 9 are states of the total 26, they are lagging behind. And as of June 30, if we go by the data that we have, approximately 2,500 crores of the state share has been held back by some of these states which are ruled by the opposition government, like Rajasthan, Chhattisgarh, Jharkhand, etc. So against a target of 6.15 million houses in the current year, only 755,000 houses have been sanctioned in this financial year, and just 559 have been completed. Now there is a huge target before us, and To complete those targets, our challenge is how to find the funding for those. I know the housing finance companies have been facing a lot of liquidity problems, and despite the RBI's helping hand of some of the housing finance companies or the NBFCs by way of raising funds through the TLTRO and TRO, etc., some of the weaker of these or the smaller housing finance companies are not finding the sufficient liquidity to on lend to these sectors in a big way. On top of that, there is a study which has been published by the rating agency ICRA, which has estimated that the asset quality of all the segments of housing finance would be impacted, and more so in the case of affordable housing. And in the case of self-employment segment also, compared to the salaried ones. And the reason being the uncertainty which has been associated with the COVID-19 situation today, where many of the unorganized sector people have lost their job and they are not finding enough to take the loan first of all, and if at all they take the loan, and then how to repay that loan. So therefore, the credit growth of the housing finance company is likely to be subdued as per their estimate to around 9 to 12% vis-a-vis the 3-year compounded aggregate growth rate of around 16% in the backdrop of the current COVID situation. Now people have been deferring today home loan purchases till they achieve stability of income and the resumption of business activity. Now we have seen in many metros and large cities that there is a lot of piled up inventory which is remaining unsold because there are no takers. Although the prices have been more or less steady or they are showing some downward spiral, but still a lot of action has to be made there in making these prices affordable, the middle class as well as to the lower middle class of the society. My submission today is purely to highlight the situation in terms of the availability of liquidity to the NBFCs and the housing finance companies, because we find that most of the banks are dragging their feet in doing any kind of funding to the real estate companies, whether it is for commercial real estate or for the housing for the retail segment. In both cases, we find that the banks are very, very chary in taking up new proposals, and they are putting up conditions which are sometimes too difficult to fulfill, in the sense that they have been demanding collateral facility or the collateral to be made available beyond 100% in addition to the project fund cost. So these things, they are coming in the way of raising funds as far as the housing finance companies and the NBFCs are concerned. So that is a very genuine problem which I would like, which should be brought to the notice of the powers that be, whether it be RBI or to the ministry, where these issues could be addressed amicably, and the big push which is required under the Prime Minister Awas Yojana could be given the boost that is necessary to take this forward. These are my comments today. Thank you very much.
Thank you, Mr. Pradeep Shankar, for your insights. I now invite Mr. Gagan Banga, Vice Chairman and Managing Director for India Bulls Housing Finance Limited, to share his views, please. Thank you.
Good evening, everyone. We are in the midst of unprecedented times with the COVID-19 pandemic. India has been suffering. To combat this pandemic, the country went into a phase-wise lockdown, and it has driven us to economic data points which one has not seen over the last 69 years. I think it is globally accepted now that a large part of the world, including India, may actually slip into recession. The real estate market in the housing finance industry has obviously not been spared. It's amongst the worst affected. Further reverse migration of laborers and skilled workers back to villages has led to a near complete halt in the construction activity, on top of the dented buyer confidence based on their future income levels, leading to a severe dent in demand. While the lockdown has now been partially lifted, we believe that it will take at least a couple of quarters for the economic activity to be back to COVID-19 levels, and for people to get some sort of confidence, especially since purchasing a house is a multi-year, if not a multi-decade commitment of future income. The sharp decline in real estate demand and increase in unsold inventories is manifesting itself as a threat in the form of increasing NPAs. Several of my co-panelists have spoken about it. Rating agencies have also spoken about it. As per CRISIL, housing finance companies' home loan segment is estimated to have at least 80 to 90 basis points worsening in asset quality by March 20 itself. By March 2020 itself. By August 2020, when the moratorium gets lifted, the real picture on delinquencies will start emerging, and no one really knows how the portfolio post the moratorium is going to behave. The government and the RBI have taken various steps to arrest the slowdown in economy, such as decreasing the repo rates and a slew of other measures to provide liquidity to housing finance companies, non-bank finance companies, MFIs, etc., through TLTRO, through partial credit guarantee scheme of 45,000 crores. Some of these schemes have become operational, but others are still trying to find their way through operationalization. Fortunately, the one scheme which is working hard and being able to provide the last mile liquidity is the scheme run by Irfan, which is giving some sort of a relief to the overall sector. All these policy measures will serve to support the housing sector in these tough times. A happy consequence is that the decreasing interest rate has led to home loan rates falling to all-time lows. In my 20+ year career, I have not seen home loan rates at such levels. With the decrease in demand for real estate and increasing inventory levels, the real estate developers have also started offering homes at 10 to 25% discounts to pre-COVID levels. There are tremendous tax reliefs already in place on principal and interest payments. And at this point in time, if we factor in all the benefits that one gets on interest and principal payments, on tax relief, etc., the cost of taking a home loan is practically zero. As per RBI September 2019 report, the demand for urban housing in India is expected to be about 100 million units by 2022, driven by increasing population. This may get slightly dented because of the reverse migration that one has seen, but the demand of 100 million units is a very, very large demand. By the end of fiscal 22, the report estimates that total outstanding home loans will reach roughly about 35 lakh crores, which will be a very steady 30+ kind of % CAGR over the last 10 years. Factoring in the COVID-19 impact, it will still be in the high 20s. So demand has been and is continued to remain robust. The housing sector accounts for approximately 5% of India's GDP. Housing and the larger real estate sector has a high growth multiplier effect on the economy, with linkages to over 250 ancillary industries. Housing sector is also the country's 4th largest employment provider, employing both semi-skilled and unskilled labor. It thus has the ability to revive and kickstart the economy as we progress on this unlockdown. And my strong suggestion to both Government of India and state governments, as well as the regulators, would be to focus on this sector for the much needed boost to flow through to the wider economy as well. The government and the regulators have already shown willingness to support the sector. through various measures. I would want to suggest a few more measures which will further help revive the market. In the short term, the Reserve Bank can look to further increase the liquidity support to the sector by buying corporate bond papers. Mutual funds, which in the past had been the largest investors in debt papers of housing finance companies, have been shying away from investing in the sector. In the last 2 years, mutual funds have withdrawn over 1.7 lakh crore of their investments from NBFCs and HFCs put together. Lenders have been extremely credit risk averse. The RBI governor, in a speech 2 days ago, has also spoken about the extreme risk aversion which is prevailing. And thus, 80% of fresh NCD issuances is now restricted to only a handful of AAA rated players. Central banks' direct participation in bond issuances, especially of non-AAA rated players, will go a long way in ensuring access to liquidity for all non-AAA players. Considering the unprecedented nature of the situation we find ourselves, another measure would be to allow a one-time restructuring of all real estate developer loans, like what was provided during the aftermath of the global financial crisis in 2008 and 9. For the long-term stability and the growth of the housing finance sector, the government and the regulator can probably focus on 3 important themes. The entire Western world does its mortgage financing on the back of a very vibrant securitization market, which is extremely small and restricted in India. So if the securitization market can get developed, several steps have been taken, including new draft guidelines being put up by the Reserve Bank in June. I hope that that market is facilitated and developed over the course of the next few months. There are several steps being taken to develop the secondary bond market. SEBI chairman has also spoken about it. That is extremely crucial if housing finance as a theme has to get more deep-rooted. What is still not being spoken about are credit default swaps. If that market is developed, this entire fear around specific entities in the housing finance and the NBFC space can get withdrawn, and the CDS can price in the default risk. With all of these steps, I'm quite sure that we will be able to do the financing of the 100 million units requirement which has been projected. That brings an end to my statement, and I hope that all of us continue to remain safe, and we do see better days ahead. Thank you.
Thank you, Mr. Gagan Banga, for the insights and the recommendations. We were just waiting for this. Can I now invite Mr. Irfan A. Qazi, Chief Investment Officer, Swami Investment Fund and SBI Cap Ventures Limited. Sir, this is a special address. Thank you for being here.
Audio is not coming. Cannot hear. You'll have to unmute the mic.
Am I audible? Am I audible, sir? Hi, am I audible, please?
Yes, sir, you are audible. Yes.
Okay, can I now invite Mr. Irfan A. Qazi, Chief Investment Officer, Swami Investment Fund and SBI Capital Ventures Limited. Sir, thank you for being here. It is a special address to our audience. You're welcome, sir.
Thank you so much. Respected members of this panel, members of ASSOCHAM, and especially anyone who's taken time off work at home or at work to attend this discussion. Good evening. Thank you so much for giving me an opportunity to speak about something that I like to speak a lot about now, the Swami Investment Fund. In the next 15 to 20 minutes, let me take you through a quick journey. Let's go over the landscape of the time between which the fund has moved from a policy initiative to an operational fund, from a concept to something that is working on the ground. And all this has happened in the last 7 months, which include 3 calendar months and 4 COVID months, right? So, what I'm going to talk about is the journey since then, now, and what do we see, how do we see the situation panning ahead, especially, the collateral effect that it's going to have on the housing finance sector. So just quickly, the Honorable Finance Minister made a policy announcement on November 6th, wherein a special window for affordable and mid-income housing projects was announced. This window was announced specifically for the completion of stressed projects in this sector. And just as a background, what led to this announcement, the series was the fact that the government had done a market study along with inputs from SBI, and we had discovered that there are about 4.5 lakh stalled home units in about 1,500 projects across the country. The fact that there are so many stalled projects wasn't, the only factor that brought about this fund. The fact was that these projects have been stalled, one, for a long period of time, and two, they have been stalled after they have been significantly sold, which means that there are a large number of home buyers literally trapped in these projects. So the government initiative was to rescue the home buyers who have purchased homes, who have their hard-earned earnings in these stalled projects. And you'll hear me, using the term home buyers and rescuing home buyers very often, because that, after all, is the objective of the fund. And how does the fund do that? The fund looks at completing stalled, stressed, affordable, and mid-income housing projects. And so that this is done in an objective and a transparent manner. Each of those terms, the objective of the fund, the filter criteria that a deal needs to pass through to be considered for this fund is very clearly defined and articulated. So, for example, this fund only deals with affordable and mid-income housing. We have defined the phrase to mean houses that cost less than 2 crores in Mumbai, less than 1.5 crores in the top Indian metros, and less than 1 crore across the rest of India. So, as long as a home meets these price caps and is less than 200 square meters, it qualifies as affordable and mid-income housing. And if it does, we can provide financing to it. But we do not provide financing to new projects. This fund has been formed to complete the last mile of construction, which necessarily means that the project has actually started. The project is significantly advanced. So we've set a hurdle rate. We have set a 30% criteria that the project should be at least 30% complete for it to qualify for financing. Probably the most important criteria is that this fund is providing finance to projects which are commercially viable. That is, the cost of completion of such projects should be more than met from inflows from receivables as well as from unsold inventory. It's only if a project is profitable that this fund can step in, complete the construction, and while that does a great deal of good for society and achieves a larger benefit for the country as a whole, for its own investors, it also generates a return. And it's important that the fund generates a return while creating an impact on society at large. And the reason is, if an investment is commercially viable, it will attract investors. And if it attracts investors, it can only increase the scale of the work that the fund is set out to do. So what are the kind of investors that have set up this fund? The Government of India is the sponsor and the largest investor in this fund. The SBI Cap Ventures, the company I work for, we are the investment managers to the fund. The two other largest investors in this fund are the State Bank of India and LIC. But I mention these names specifically to point out not the fact that they are the largest investors in the fund, but the great strides we've taken towards having an objective and transparent mechanism for investing this fund. So none of the three investors, and let me repeat that for emphasis alone, none of the three investors, they have any say in the decision making that the fund makes. The investment decisions made by the fund are actually done by an investment committee. The investment committee has about 7 members, about 5 of them are external members, and all decisions are by a unanimous majority. So I just read out some key clauses from the PPM. The idea is to convey the fact that each of these members is one, independent, 2, is a reputed member of the real estate community, right, with a varying functional background. So some of them represent the field of law. They are either legal partners or heading the legal function in very large corporations here. Some of them are heading the investment function. There is a person who has significant experience in the construction sector, and therefore these individuals take an objective investment decision on behalf of the fund. Just 2 more things when it comes to determining the filter criteria. The fund only looks at RERA registered projects, that's 1. And 2, the fund provides its funding in the form of senior capital. I mentioned last mile funding is normally priority funding, and let me just quickly define both the terms. When you talk about last mile funding means funding that is required to complete a project. It is not an incremental part of the of the total funding. It is not a portion of the total funding. It is funding that by itself can complete the entire project. It is also, therefore, by the nature of the fact that it has come in last, it comes in as priority funding on a LIFO basis, that is last in, first out, so that it can come in, complete a project, and then like a swift action task team, leave the project for the rest of the beneficiaries in the project, which would include the existing lenders. It would include the developer, but first and foremost, the prime target of this is the home buyer who has now got a completed home. Because the fund comes in as priority funding, there is significant amount of resistance from lenders, right? Because lenders have to cede charge. And why? Because this is a new concept, we have seen that a lot of private sector NBFCs, a lot of private sector banks have in fact taken the lead in taking advantage of this funding. They see us as partners, and we look at even public sector banks looking at us as partners in providing certain key steps in providing rescue capital for not just for the real estate sector, but anything that benefits the real estate sector. And many eminent people on this panel will second that. Anything that is good for real estate is good for the country as a whole. So that's one bit. So what does this fund do differently, right? One of the things we do differently is we are not a fund that invests only in Mumbai, only in NCR, only in Bangalore, right, and possibly in Hyderabad and Chennai. We look at deals across India. So we have done deals in Karnal, in Chandigarh, in Kota, in Jaipur, in Surat, in Nagpur, in Vizag, and Chennai, right? So we have been doing deals across the country. And I mentioned at the start that I'll take you on the journey from concept to commissioning, from a policy initiative to an operational fund. So I'm glad to report that we have now completed as many as 81 deals. 81 deals provide for the completion of about 60,000 home units across the country. So that's really a substantial amount of progress that we've achieved in a very short period of time. Just to put it in another scale, we are clearing about 10 to 12 projects every month, right? Something on this scale has never ever been attempted in India before. We are different from any other team also because we look at not just the smaller towns, we look at deals across the spectrum. So we do not have anything like a sweet spot. We do not look at deals only of 50 crores and above. We are willing to look at deals from as much as, let's say 5 crores or so, to as much as 400 crores in any investment and 800 crores in any project. So we are looking at very large deals which have been run by, which are being directly supervised by the courts. And we are also looking at small deals in small towns with the objective of completing construction and providing the home buyer with the desired home, right? Now, one of the things we do differently also is the fact that I mentioned that we do not provide just a portion of the financing, we provide the entire financing. It's almost like an all-weather financing. We are not dependent on the fact that sales could slow down further, that home buyers could be very reluctant to respond to capital calls when they are required to do so. Now, the industry is full of stories of how, in spite of construction even progressing, home buyers have not responded when they are required to pay off as construction milestones are reached. That is happened, that is happening, and that's why there are a large number of stalled projects, right? Because they are dependent on that as a source of financing. So what we do a little differently here is we are not dependent on that. We are willing to step in to complete a project regardless of how the environment shapes up going ahead. And once the funding is complete, once the project is complete, we will look at getting back our funding. So this is 12% funding, 12% in the form of IRR. It is funded by subscribing to NCDs issued by the developer. It is entirely back-ended. It's entirely pay-enabled. There is no coupon rate, and all the cash flows are actually diverted towards construction. So that's a very positive use of the word diversion. Probably the only thing that we do when we allow funds to flow to a lender is when we are working with an existing lender. So we let maybe 10%, 5%, 15%, depending on the numbers in the deal, to flow to the existing lender, while the balance 80 to 90% flows back into the project. It does not come to us. So we are probably after a very, very long point of time, and I don't remember who was the last one, financier who comes in and is focused only on completion of construction. We start thinking about getting our money back only after construction is completed. So, it's obviously going to help home buyers. That is the target sector. That's the reason why we'll get into troubled projects. That's the reason why we'll do, why we'll fund projects that nobody else will think of funding. So that's one bit. But when we help the home buyer, there are other collateral benefits that come out of the situation, right? So one, we expect employment to rise. So there are construction sites across the country that have been activated as a result of SWAMI funding. I mentioned that there are 81 projects that have got funding. About 7 sites are now functioning across India simply on the basis of the SWAMI funding. So, apart from home buyers, it is going to increase employment. It is going to increase the demand for commodities like cement and steel, because that consumption will get driven. It is going to be good for developers. It's going to be good for NBFCs and banks that have led to the developers. And therefore, anything that's good for such a large community is bound to be good for the rest of the country as well. We also see some things changing as a result of the fact that the SWAMI fund is coming in. So, for example, while we, like I mentioned, we place very little dependence on sales, and in most cases, when a developer comes to us and says that while I'm not selling right now, as soon as the SWAMI fund comes in, I expect sales to happen. We do not place a reliance on that, and we provide for funding as if no incremental cash flows are going to come from receivables and sales. But we still expect that the fact that that a project has been funded by SWAMI will lead to increased sales. It will lead to an increase in the confidence that a home buyer will have, an existing home buyer will have, to actually pay up when there is a capital call, because now he knows that a project will be completed. It will lead to confidence of a new home buyer. So there were things like trust deficit. Nobody knew if you buy into an under construction project, if the project is ever going to be completed and all that. Those questions, those thoughts will not arise when the SWAMI fund comes in to complete the construction. We also expect, and since this seminar or this webinar is primarily for housing finance, that it will lead to some changes in housing finance, right? So we expect home buyers who have defaulted with their HFCs because they are in stalled projects, right? To also start paying up, for those loans to get activated, for banks to give the home buyer the capital to fund the purchases. So that's one. Two, there would still be some reluctance given the kind of projects that we finance across the country. There could be some reluctance from both home buyers as well as from housing finance companies. And we see that, we see maybe there is a different kind of a situation that might be evolving. So we look at, possibly situations where a developer who's getting our funding might announce that in order to propel sales, in order to provide a catalyst to sales, he just might announce schemes like, if you put in 20% of the money, if the home buyer puts in 20% of the money, and let's say the housing finance company backs the home buyer with 10%, then neither of them have to take any risk with the ongoing construction, with the progress of construction. That's the risk that our fund will take. So we will step in, we'll complete the project, and when the project is completed, the HFC will provide the balance 70% to the home buyer, who will then provide will repay the outstanding receivable that is there on the home unit. So as a combination of both, I see, when the Swami Fund comes in, it will provide a catalyst not just to construction, and that's bound to happen. That's the reason for our existence. But it will also provide a catalyst to sales, and it will provide a catalyst to even housing finance companies to step up, step ahead, and provide finance to such projects without taking a risk on these projects. I mean, that risk is something that we'll take, we'll complete, and when the home is completed, the housing finance company will provide the remaining finance. Those are the thoughts for a not so dull afternoon. Thank you so much for giving me this opportunity. Thank you.
Thank you. Thank you, Mr. Kazi. These are great insights from you. We're open to question and answers. Please do post your question answers here. I would move my next invitation to Mr. M. Nagaraj, who's the Chairman and Managing Director for Housing and Urban Development Corporation Limited, HUDCO. Sir, thank you for removing time for our session. I invite you for a key address to the audience, sir. Thank you.
Dr. Sri Niranjan Hirandanaji, President Associate, distinguished panelists, ladies and gentlemen, a very good evening to all of you. It is indeed my privilege and pleasure to participate in this webinar on housing finance in India going forward. As we all know that global economy has slowed down due to COVID-19 pandemic. As per the IMF report, the great lockdown due to pandemic will be more intense and extensive than the Great Recession caused by global financial crisis in the year 2008. India has resilience and capability to overcome all odds and bounce back faster. Housing and real estate sector would be the key for our economic revival because of its deeper inter-industry linkages with over more than 250 industries and strong multiplier effect on income and employment. And for housing and real estate sector to grow, one of the primary requirements is the availability of long tenure, cheaper and accessible funds to the developers as well as the home buyers. Adequate flow of funds to the housing sector is not forthcoming, though Government of India has anticipated it from the private sector when the National Urban Housing and Habitat Policy got approved from the Parliament and extended several incentives through tax reforms. Some of the key challenges relating to the housing finance, especially affordable housing segment, include: number one, liquidity crunch, which originated from IL&FS fiasco and being faced by all the NBFCs and HFCs. With COVID-19 outbreak, demand and liquidity constraint has further intensified in the sector, as shown by the gross bank credit to the housing sector. The gross bank credit to housing sector as on March 2020 stood at 13.4 lakhs crores, which is 14.5% of the total gross bank credit. The year-on-year variation in loans to housing sector declined to 19% in financial year 2018-19 to 15.4% in 2019-20 and further declined to 0.7% during March-May 2020, that is a post-pandemic. High levels of NPA and credit risk. As per the Financial Stability Report of RBI published just a couple of days before, that is on 29th of June 2020, the macro stress test or credit risk indicate that gross NPA ratio of all the scheduled commercial banks may increase from 8.5% in March 2020 to 12.5% by March 2021. Under the baseline scenario, the ratio may escalate to 14.7% under severely stressed scenario. NPA in the construction sector has gone up to 24.3% in March 2020. This has implications for aggregate asset quality of the banking sector, which will further affect the flow of funds to the housing sector. Huge flow of finance in affordable housing segment as per the National Housing Bank report on trend and progress of housing in India 2019. The flow of funds for MIG and FIG categories constitute 98% as against the shortage of only 4.5 or say about 5%. Whereas it is just 5% to economically weaker section and LIG categories, as against the 95% of urban housing shortage in that sector, resulting the government's intervention in the affordable housing with huge investments through MAY, that is housing for all. Fund flow from formal banking system is low to the private sector also. Lack of formal credit for informal sector housing, inadequate microfinance facility in the housing sector, and low affordability of economically weaker section and LIG beneficiaries, especially migrant laborers, payment dwellers, and other people from informal sector. Some of the special interventions by Reserve Bank of India and Government of India for housing finance sector, I would like to just couple of them to mention. As a part of the economic stimulus package, the Reserve Bank of India and the Government of India announced several measures to support the housing finance sector, such as reduction in repo rate, lowest repo rate in the last 9 years. Repo rate reduced by 115 basis. As you all know that it has been reduced to 4% from 5.15%, which will enable reduction in home loan rates. Special refinancing facility of 10,000 crores to National Housing Bank, supporting at repo rate to all the HFCs. 13,000 crores special liquidity scheme to NBFCs, HFIs, MFIs, out of which almost 14,000 crores have already been tied up as of July. Extension of credit linked subsidy scheme for MIG category, which was about to lapse on 31st March 2020, it has been extended up to 31st March 2021, which will generate almost 70,000 crores in the housing sector alone. Government during the last 15 days back has launched affordable rental housing complexes for migrant workers and urban poor. Partial credit guarantee scheme for purchasing high-rated pooled assets from financially sound NBFCs and HFCs, allowing banks to provide partial credit guarantee to bonds issued by systemically important non-deposit taking NBFCs and HFCs. Temporary relaxation of minimum holding period in respect of securitization of eligible assets by NBFCs, and special window for funding stalled affordable projects of middle income and housing projects. These are the measures which are in addition to measures already taken by the Government of India earlier in order to catalyze the housing finance sector in India. Some of them would like to point out fiscal concessions in the form of tax incentives, setting up of National Urban Housing Fund and Affordable Housing Fund, which are being managed by NHB, granting infrastructure status to affordable housing, easing of foreign direct investments and external commercial borrowings, lowest GST from 12% to 8% and further to 1% for affordable housing, promoting PPP in housing, especially we can name that affordable housing in partnership, and in situ slum rehabilitation project, for instance, DID likely to float a scheme in Delhi, then real estate investment trust. However, some new and innovative financing instruments, like our colleague from SBI Venture Capital was saying, we need to go for that, maybe tapping insurance, pension, and provident fund sector. I would like to mention what HUDCO has been doing in affordable housing finance. We are taking a proactive role in being played for providing long-term funds at a competitive rate for all implementing agencies in the affordable housing space as a key stakeholder. HUDCO is a leading techno-financial institution in the country with a 50 years history. We have been playing a vital role in increasing the affordable housing stock through the parastatal housing bodies, for instance, like housing boards, urban local bodies, slum clearance board, improvement trust, urban development authorities, in addition to being closely associated with the Government of India in implementing various Government of India flagship programs like Pradhan Mantri Awas Yojana, Housing for All, both the components urban as well as rural, Rajiv Awas Yojana, JNNRM, ILCS. I would like to highlight some of the efforts which were made in a special way. So far, 19.62 million affordable houses have been supported since from inception, that is 50 years, out of which 93% of the housing units pertains to economically weaker section and LIG categories, involving project cost of 1.7 lakh crore, with a loan sanction of 91,600 crores, loan disbursement of 3,000 crores. HUDCO, I can say that proud, single largest HFC in the world to finance affordable housing projects in a massive scale. The last one financial year alone, that is year 1920, HUDCO has financed construction of 3 lakh houses, out of which 98% pertains to economically weaker section and LIG category. And we are the only agency financing land acquisition scheme, thereby making land available at relatively cheaper price. Some of the states last year we have funded Kerala, Uttar Pradesh, and Karnataka. We have most competitive terms of finance, lowest interest rates with longer repayments for making housing finance affordable in all sections of the society. We also don't charge application fee, front-end fee, which has been completely waived for affordable housing. Technology advocacy on use of cost-effective building materials and construction technologies. We are also central nodal agency for credit-linked subsidy schemes on one of the verticals, PMAY, in addition to State Bank of India and NHB. We are also appraisal agency for all other three verticals of PMAY except CLSS. We also funded number of schemes in viability gap funding, especially to the state governmental agencies, urban local bodies to meet their share of project cost. And we are also involved in mobilizing 20,000 crores for Government of India, especially in affordable housing fund. We also have a specialized institute called Women Settlement Management Institute, wherein we train and capacity building of all the stakeholders. And so far, 17,000 programs we have done, 1,700 programs we have done, with 47,000 people we have trained. We have also associated with microfinance for housing to ensure financial inclusion of the poorest sections of the society, especially with a special emphasis on special employed, self-employed women in slums and informal settlements. There is an institute called SEVA. We have joined by infusing equity. The program is SEVA Grihin. Further, we have developed standardized housing designs, construction practices, which aim at containing the cost and bringing housing within the reach up a common man. ADCO is fully committed for the cause of affordable housing for all, in a position to step up its lending to the housing sector through viability gap funding and other innovative financing mechanism to its clients with competitive terms of finance, and in a mission mode to help the government India achieving national goal of housing for all by 2022. Despite the hardship due to COVID-19 pandemic, India has shown resilience and the capacity to overcome all odds. Government and RBI have already announced several fiscal incentives and policy prescriptions post-COVID, providing excellent opportunity for all stakeholders to contribute more to the housing sector. Housing and real estate sector is a major contributor in country's journey to $5 trillion economy by 2025. I request Chain to give a clarion call to all its member companies not to wait further and avail all this opportunity for both disposing of its inventory and furthering its activities to housing and infrastructure development. ADCO would consider extending viability gap funding for the construction sector to overcome the present stagnation. Let us join hands to make India self-reliant and sustainable in line with the vision of Honorable Prime Minister of India. Stay safe, stay healthy. Thank you so much for giving an opportunity to me.
Thank you, Mr. M. Nagaraj, for the insights. We have a few questions for our panelists. If you please allow me, this question, the first question is for our Mr. Irfan A. Qazi, our special addressee. Sir, the question has been asked that the builder is pressurizing us, the home buyers, to withdraw compensation cases for delay from NCDRC as per requisite to get Swami funds. Is this withdrawal a condition to get Swami fund for the project?
So if I have to give a yes or a no answer, no. It is a condition for us to fund a project. And let me explain that. I mentioned that we are here to fund projects which are profitable, which means that the receivables and the unsold inventory, the value of the receivables and the value of the unsold inventory should be greater than the cost to complete the project, right? If there are a large number, and let me emphasize the fact that we are talking of a large number. If there are a large number of claims of interest, of damages, of refunds, of cancellations, then if we remove that then if we add that to the project cost, the project is unviable, right? So there are two things we can do. We can walk away and say that it does not meet our fund mandate because the project is not profitable, which is the easy thing to do, and we will not do that. So what we do is, we say, allow us to complete the project. Those are our exact words. Allow us to complete the project, and for the duration of our funding, only for the duration of our funding, while we are invested in the company to complete the project and deliver the home, let's have some kind of moratorium on interest penalties, on refunds, and on cancellations. Once we have exited, right, the home buyers can continue to, whatever claims they have against the developers, that is between the home buyer and the developer only. And we are not going to, play sides here or take anyone's side. And to remove all ambiguity on this, we have also very clearly articulated this on our website. So question number 20 on our in our FAQs on our website very clearly says that only for the duration that the fund is invested in, and to allow the fund to complete a project, there should be some kind of moratorium on, or we ask the existing home buyers to agree to hold on to their claims for interest, damages, or any kind of liability.
Sure, thank you. So the FAQ question number 20, please do refer to that. Sir, I will request Mr. Irfan Qazi to also take another to other panelists. There is a query made that the due diligence cost for a small debt requirement, like between 5 to 15 crore, also is quite high, to the tune of 20 lakh rupees. Can't Swami Fund interfere and ask agencies to make this more reasonable?
So let me explain how we go about the process, right? We first take a prelim approval, we then go through the due diligence process, and then we give a final approval. Like any other prudent lender, we will not be able to give a final approval without going through the due diligence process. While doing the due diligence, we carefully select the competence of the agencies that we are working with. And we do a financial due diligence, we do a technical due diligence, we do a forensic due diligence, we do a due diligence on real estate approvals, ESG, and so on. When we appoint the agencies, given the fact that we work in a public sector environment, right? While we are calling for quotes from reputed agencies and agencies with the capability and the competence to do the work, we are still awarding the contract to the agency that has submitted the lowest quote. So we are trying to keep costs at the bare minimum. But let's not look at this in isolation. Understand that this fund has no processing fees, this fund has no application fee, this fund has no commitment fee. We only have a 12% IRR, which is completely back-ended, right? And if it means to incur a certain cost so that the fund is prudently deployed, we need to do it.
Sure, sir. Thank you. We have a question. Yeah. Thank you, sir. We have a question for Mr. Gagan Banga. Whether the vision for our Prime Minister Modi Housing for All 2022 can be achieved, and if yes, then what are the steps being taken by the housing finance industry to deliver the pending projects? Of course, Swami Fund is doing a fantastic job, but other than that, Gagan, and then maybe the other panelists could also attempt some more suggestions here. Thank you.
Sure, thank you. I think the vision is quite achievable. All counterparties, the counterparties involved are the lenders, which is housing finance companies and banks. If you look at the last 10 years, housing finance in India has grown quite handsomely at north of 20%, and that as a trend has caused a great increase in overall home credit being available. Since it has increased so much, I see no reason why it can't continue to compound at 20 to 30%, and if it does, we will achieve the goal. Obviously, the real estate developer, who is the second counterparty, has to continue to develop homes and get money for construction. I think the real estate sector is also getting better and better organized by the passing day. The opaqueness which was there in the sector with RERA and other measures is behind us. More and more larger players are emerging. I think with the organization of the sector, the scope only gets enhanced. The cost of construction, in effect, gets reduced because of the scale, and I think real estate developers are also well placed to achieve this goal. This goal will definitely require two things to happen. One is that more equity type money has to come into the country, for which both RBI and SEBI, backed by the government, have to take several steps. They are taking those steps, but a lot more has to be done. I think that financing of all of this is going to be the biggest challenge, and for that, getting equity type money is very important. And similarly, there is a misconception in the market that financing of real estate developers is largely a very risky business. Having done that for now 15-16 years, I actually think that through the cycle, that's a good business to do. It obviously has to be done very carefully, but from an overall credit cost perspective, it is a good business to do. I think if more debt funds can be made available for lending to real estate developers for both land as well as construction, this dream will certainly become a reality. The good thing is all stakeholders are moving forward. There is a sense that we can achieve this dream, and if one is convinced that one can achieve the dream, why would it not be doable? With some small steps, it will definitely happen.
Got it. Sure. Thanks. May I also request one or two suggestions on the same question, because there is an interest for the audience to know about the PM Modi Housing for All 2022 and what steps is the housing finance industry taking with Mr. D.S. Tripathi and Mr. Pradeep Shankar. Just one or two suggestions that you may have, please.
You see, I think Mr. Gagan has covered so many things because it requires, we already have last actually 6 months of this year, and probably the entire year will be not having the same growth as we were expecting. If you see, about 6-8 months, the housing for all was going on track. But if we have to make good to the loss because the pandemic we have suffered, one that all housing finance company, all major companies are having liquidity. They need to have proper liquidity. The government of India should immediately find a way out how the all type of builders, because it is not only the supply of the bigger housing is required. Housing for all, aiming to providing housing to move to the affordable housing segment of 35 lakh rupees, the cost very involved. In that situation, the informal segment is the main category, main portion which needs to have house. Otherwise, all the upper middle class people, they have the houses. So I personally believe there's something to be done to push up the demand situation from the informal segment and low income group to get the houses for that. Subsidy is available. Only thing that a housing finance company and the builders have to be given the proper liquidity to quickly construct. It might take 6-8 months of delay after March 22, but the project, the concept of housing for all in track, and you have to factor the pandemic situation. And I expect that at least the state government should come forward, reducing the stamp duty for the affordable housing customers, number one, and quickly start giving approval. They may give approval on undertaking basis instead of taking a long process and all that. Depending on the size of project, they should consider for the quick approval, which is still not happening in many states. Even for a certain square feet, say 200 square feet or 150 square feet of the self-construction, they should allow the homemaker to certify that he is constructing the flat as per the requirement of the development authorities, instead of going through rigmarole. So all these 2-3 things and the liquidity, these are the key requirements.
Thank you, Mr. D.S. Tripathi. Mr. Pradeep Shankar, any suggestions, sir, from you?
Hello. Yeah. Am I audible? Yeah.
Yes, sir.
Am I audible? Yeah. Okay. See, basically, what I was emphasizing in my brief interaction about the availability of liquidity, the housing finance company. Basically, they are the ones who are driving the entire force. So if they have enough liquidity at their disposal, whether it comes from the bank or through the TLTRO or through any other source of funding, if those funds are made available to the companies, we will be in a better position to execute the dream of the Prime Minister as far as the affordable housing is concerned. Otherwise, the suggestions made during this seminar are very well taken. They have harped upon all the aspects of the range of problems which are facing the entire country. So I am with all of you. Thank you.
Sure, sir. Thank you. We are running out of time, but last question for Mr. M. Nagaraj. Sir, the future plan on investing in the real estate housing sector, especially post this uncertain COVID period, is something our audience wants to know, because the sector is very worst affected. So would you have any views, sir, on the future plan on investing in the housing sector? This is by a PMC company. They've asked this question, sir.
As of now, we have not taken a call, but we are open for it. We are just reviewing the guidelines and all. So maybe we will come back to you shortly.
Sure, sir. Thank you. We've run completely out of time. While there are more questions, I will request the audience to address it so we can address it offline with our panelists. I would like to just take a minute or two to quickly summarize the session we had. My personal appreciation and thank you to Mr. Ravi Agarwal for the welcome address, Dr. Niranjan Hiranandani to take us through the insights on the industry perspective, Dr. Neha Berlia for giving us her address, Mr. D.S. Tripathi, who gave some insights and measures on the affordable segment. He also spoke about the informal segment for affordable and the focus that the government and all should give in the industry to low-income group. Thank you, Mr. Pradeep Shankar, who spoke about some measures and recommendations for RBI, the NPA's views, and finally on the question, your suggestion on focus on the liquidity issues which the industry is facing have been noted. Thank you, Mr. Gagan Banga. 3 recommendations that you made have been noted by us and will be addressed to the relevant authorities and government. One was to develop a securitization market. The second, the secondary bond market, and that's very important for the housing finance industry to prosper. And the third, the credit default swaps that you mentioned. I am grateful to talk to Mr. Irfan Kazi of Swami Investment Fund and SBI Capital Ventures for a special address. Sir, your insightful address has given our audience, which comprises of both developers and buyers alike, I'm sure, and the way they will benefit. Thank you for sharing the policy initiatives and the operational aspects alongside and also the various large and small deals across tier cities, 2, 3, 4 tier cities that you're doing. It was very heartening to know that there is big relief for the home buyers. And finally, I thank our key addressee, Mr. M. Nagaraj, CMD Housing and Urban Development Corporation. So thank you for sharing about the gross NPA margin situation, and that clearly needs to be addressed, going from 8.5 to 12.5 and further up. You spoke about the interest rate regimes and the advantages of our interest rate. And finally, it's very heartening to know that organization like HUDCO is looking at and has implemented standardization of housing design. All these were shared and noted. Thank you, ladies and gentlemen. We've run completely out of time. I heartily also would like to apologize for the technical glitch I witnessed in the initial part of this session. Thank you for bearing with us. Thank you, gentlemen.
Thank you.
Thank you. Thank you very much. Thank you. Thank you.
Thank you.
Thank you.
Thank you.